Good afternoon, ladies and gentlemen. It's an honor to be here. As I prepared for my speech, I thought it would be fun to imagine myself as Frodo in Lord of the Rings, sharing my investment adventures in China. My colleagues, however, pointed out that investing in China over the past few years wasn't really an exciting adventure at all. It's more like a horror story, similar to Jack Nicholson in The Shining. You see, this horror story began in 2020 with the shocking suspension of Ant Financial's $37 billion IPO, which was supposed to be the largest in history. Then in 2021, the ride-sharing app Didi was disrupted from trading a few days after IPO. Shortly afterward, there was an unexpected reform of the $100 billion education sector. These events, along with the pandemic and rising geopolitical tensions, have made China seem uninvestable. There's a saying, when in doubt, stay out. Despite the market rally last week, many of you might still be scared of China. However, as a contrarian investor, I see quality growth in the country. Indeed, McKinsey stated last year that the next China is, in fact, China. Why? Let's consider the numbers. According to a McKinsey report, 38% of China's GDP comes from domestic consumption. This is a $7 trillion market, which is equivalent to the domestic consumption spending in France, Italy, Germany, and the UK combined. Excitingly, China's middle class is projected to reach over 650 million people by 2030. This figure is close to the entire population of Europe. As investors, we simply cannot ignore these opportunities. The reality on the ground is that there's a lot of countless hidden gems waiting to be discovered. Today, the average consumer in China is technologically savvy, open-minded, but at the same time, they are also discerning.